What's going on, guys, and welcome back to another video. So today, with the help of Dandy Finance, we will look into 3 stocks in the tech industry. I will look at the fundamentals, and Dandy Finance will look at the technical analysis, and we'll look to see which of these 3 companies are the best to buy now. The 3 stocks we will discuss today are Alphabet Class A, Apple, and Amazon. So again, I just want to say thanks very much to Dandy Finance. Again, he's on screen now, and I'll put the link to his channel, the first link in the description below. He's nearly at 800 subscribers, so it'd be great if you could pop over to his channel after this video and subscribe if you haven't done so already. So thanks very much to Dandy Finance, and now let's look into today's video.
Hey Brian, thanks for having me on the channel again. And hello everyone, this is Ignas from Dandy Finance. I'm here today to present my technical analysis for the free picks.
Just before we look into the fundamental and technical analysis of these 3 companies, I firstly just want to show my current holdings in each of these. So these 3 stocks make up part of my technological pie, which currently has 1,350 euro invested, and we're up over 19.5%, so I'm quite happy with how this is performing. So these 3 stocks, Amazon, we currently have 270 euro invested and are up 8.1%. Apple, we have 306 euro and are up 22.15%. And Alphabet Class A currently has 355 euro invested and we're up an impressive 41.5%. So the first company that we're going to discuss is Amazon, which had some quite big news over the last few days in terms of Jeff Bezos stepping down as their CEO. So it's going to be very interesting to see over the coming weeks, months and even years how this is going to affect the company as they adapt to these big changes. So even though it says on Yahoo Finance that this stock is a consumer cyclical stock, I still tend to prefer to think it as a tech stock. Even though, just like Facebook, for example, as well, a lot of people like to call that a tech stock, even though technically it's in communication services. So for this video, we're going to just keep Amazon as a tech stock. It's currently in the internet retail and has over 1.29 million full-time employees, which is huge numbers. In terms of Amazon's top shareholders, we have the Vanguard Group leading the way with 6.5%. We then have the likes of BlackRock with 5.5%, State Street Corp with 3.26%, and FMR with 3.16% holding. I believe as well that the first 100 billion quarter made by Amazon was kind of overshadowed a bit as well with the big news of Jeff Bezos stepping down, but that's certainly huge news for the company and certainly is going to benefit the company hugely going forward. And this $100 billion quarter certainly didn't go unnoticed, as again it's currently at about $3,350. However, some analysts are now pricing Amazon stock at over $5,000. We will let Dandy Finance dive further into the technical analysis of Amazon, but definitely over the next few months it's going to be very interesting to see, firstly, if they can keep up the very impressive quarter earnings, and second of all, how they're going to adapt to Jeff Bezos stepping down.
So first we have Amazon, and this is the weekly chart. We had a lot of overbuying in the summer of 2020, but by the end of it the interest started to fade. By the mid-September the 12-day moving average crossed the 26th one to the lower side and is still there ever since. So for almost half a year the price keeps moving sideways. But if we check on the histogram of the MACD, in the last 3 weeks we saw some bullishness there. The 12-day moving average of the MACD is moving up closer to the 26th one. And the price seems to be inching up. Let's change for the daily chart. Here we can find that the price is currently moving together with the 50-day moving average, which is at around $3,200 per share, but just right now we are still above it. So it could be a good idea to wait for the price to go under the 50-day moving average. If we check onto the histogram of the MACD, the last 3 days were actually bearish, so I would be interested in waiting to get a better price.
The second company we'll discuss is Apple, which is in the tech sector, with their industry being consumer electronics, and it currently has 147,000 full-time employees. Apple's current CEO, as I'm sure you're well aware, is Tim Cook, and their top holders are the Vanguard Group again with 7.6%, BlackRock with 6.37%, Berkshire Hathaway, Warren Buffett's company, with 5.6%, and State Street making up the top companies with just over 4% holding. Apple is one of my favorite companies, mainly because they have vast opportunities to innovate and improve going forward and really improve everyone's quality of life. And even ages ago, even when Tesla was kind of starting off, I always thought that Apple down the line would try to copy them in some aspects to diversify their overall current holdings or portfolio, and they're currently doing this. And we can see now that Apple are currently in talks with Hyundai to actually start building their very own electric vehicle. So that's going to be huge news if this actually goes ahead. and you can even think long term as well that they'd even have everything synced up to their Apple products within that electric vehicle as well. So certainly Apple has huge potential, even more so than we thought. In my opinion as well, it's always reassuring when a company wants to buy more of their stock back, and Apple have certainly done that, and we can see on screen now that they sold 14 billion worth of their bonds and actually rebought some of their own shares. And also, with talks of Apple again kind of going into the electric vehicle market, and also because a few months back where they went into the health kind of sector as well in terms of making their own health products. So again, with all their technology they currently already have, they're really making a very diversified portfolio, which is very promising to see as an investor. And there's even talks that they might hit the 3 trillion market cap by the end of 2021.
We have the weekly price chart for Apple. Since we looked at it last time, there is still our resistance line at around $138 per share. It seems like last week the price managed to break over it, but this week we are again moving under. The relative strength index suggests that we currently have quite some buying being done at 65, but not yet overbought, and on the MACD the movement for both the graph and the histogram are pretty much horizontal. Let's change for the daily chart. On the 25th of January the price broke through our resistance and closed at around $143 per share. That continued for 2 more days, and then the price turned south. But this week we again had some bullish moves up, and the price is now hovering just under our resistance. So even if we break over resistance, we already have proof that it will not act as a good support. So in order to get a clearer picture on where the price is going, I would wait a day or two before buying.
The third company is Alphabet Class A or Google, and again, just like Amazon, even though it's not technically a tech sector company, I still like to believe it is, and it's currently in the communication services sector, and again it's in my tech portfolio. So in the industry it's internet content and information, and they currently have 135,000 full-time employees. In terms of their top holders, it's kind of interesting to see that the top holders kind of make the list for each of these 3 companies. Vanguard again leads the way with 7.6%, BlackRock in second with 6.78%, FMR with 4.2%, and State Street with just under 4%. It's no surprise that even companies like Alphabet or Google can be hit by the pandemic as well, and they're currently on all-time highs and they're on the way back because advertising is starting to come back as well as companies start to recover. So advertising is probably one of Alphabet's main sources of income. Obviously that's well known, but the fact that over the last 8 to 12 months a lot of companies have kind of withdrawn from advertising as much as they can, again because they probably had hit their balance sheets pretty hard over the last few months due to the pandemic. So it's very reassuring and promising to see these companies starting to come back, and Google or Alphabet will certainly reap the rewards. At the moment, Alphabet is currently sitting at just under $2,100 a share, and as we saw earlier in my own Trading 2 and 2 portfolio, we're up about 42.5% in this position already, and we can see on screen that Alphabet stock hits all-time highs as analysts boost their price targets up another 14%.
The last pick is Google, and we have the weekly chart. The last somewhat decent dip in the stock we had was in September of 2020, where the price was under $1,500 per share. The relative strength index was at around 50, and the 12-day moving average of the MACD was under the 26th one. But after that it was pretty much a straight move up. By the end of November we had a price of around $1,800 per share, the RSI was over 70, and the 12-day moving average of the MACD was way above the 26th one. And we are seeing a similar thing this week with a price of over $2,000 per share, the relative strength index over 70, and the 12-day moving average of the MACD way above the 26th one. Let's check on the daily chart. Back in January the price was kind of bouncing over the 50-day moving average as a support, but in the last 3 trading days the stock really took off. The relative strength index is over 70, and the MACD is also very much on the top. So I don't feel that this is the right time to be buying the stock. After looking at the 3 stocks, I think we currently have at least some opportunity in Apple. The histogram of the MACD shows that money was moving into the stock for 2 days in a row, and we also already have experience that the resistance at $138 is not really that strong. So if funds keep coming in, then I think we could be testing the new resistance at around $144 per share. And in my opinion, our support is around $130 per share. And that was it. I hope you got some value.
In synopsis, I'm very happy with all 5 of my overall tech companies, and in particular the 3 we mentioned in today's video. Going forward, I'm only always going to buy more. I doubt I'll ever sell these kind of companies, especially the likes of Apple, which I believe have massive potential still going forward, which is crazy to think considering they have so much dominance already. However, we can even see from my profits already that I do feel at this present time that a lot of these tech companies are still overvalued, so I don't really plan on buying any more of these stocks in the near future. However, I will be definitely holding a cash reserve for any time any of these 5 companies go into the red or even drop a few percent, and I'm going to be sure to buy these companies at a bargain. So that's pretty much it for today's video, guys. Firstly, I just want to say thank you very much again to Danny Finance for taking the time and effort for making his part of the video. It's always much appreciated as he really does know what he's on about. So it'll be much appreciated again if you would head over to his channel and show him some support, as again, he definitely knows what he's talking about. And if you're new around here, it'd be much appreciated if you would even consider subscribing to my own channel, as we're only 2 subs away from our next mini goal of 700. And with all that being said, that kind of brings the end to the video. If you found it any way helpful or entertaining, it'd be much appreciated if you consider liking the video, as it would really help the algorithm out. And if you have any questions, comments, queries or suggestions, please don't hesitate to comment below, and either Dandy or I will be sure to get back to you as quick as we can. Thanks very much, guys, have a good weekend, and I'll see y'all in tomorrow's video.